All right. Well, thank you for joining us today for our lender panel. We're going to get started, and folks may join, but we want to respect your time for being here. This will also be recorded, and we'll be sending it out to everybody who registered. So, this is our lender panel navigating the loan process. And we'll be going over it with our experts to talk about the steps to obtaining a home loan and answer some other commonly asked questions so that you can feel comfortable and be prepared as you consider or start looking at getting a loan to purchase a home here in the area. And as a part of your membership, as your employer's membership at Coastal Housing Partnership, your benefit, you get a discount through our network partners, including our panelists today. We have Tiffany with CMG Home Loans and Kendra with Movement Mortgage. And so they bring their years of experience to share with us. And I'll be asking them questions to go over some of those things. But before we get started, I'll let them introduce themselves briefly, starting with you, Tiffany.
Hi, everyone. I'm Tiffany Poirier. I'm with CMG Home Loans. I've been in the lending business for over 25 years and 3 years with CMG Home Loans. Um, my main focus is assisting first-time home buyers. Just get into a conversation. Early is always the best way to go. Even if you don't think you're ready right now, just to meet with someone right away to come up with that game plan.
Great. And Kendra.
Good afternoon. Thank you, John, and the Coastal Housing Partnership for having us here today. I'm with Movement Mortgage, and I am representing my business partner, Justin Dees. He was originally the one invited and, scheduling conflicts. So he asked me to step in and, represent him and Movement Mortgage. And it's truly an honor and pleasure to be here. The reason why Justin asked me to join you guys today is because he knows that first-time home buyers are a passion, a part of my business. I always say we're bringing back the hope to home ownership, especially in the beautiful state of California. And how can we do that? How can we, change the narrative and of the home buying process, the home financing process? So this is a very big part of, my business and a passion at the end of the day to help educate, first-time home buyers and repeat buyers in the ever-shifting market. So I'm very happy to be here and represent Justin Dees and Movement Mortgage.
Great. Well, we'll start with you. Tell us about that. How does somebody know when the right time is to meet with the lender? Do I need to be, like ready and to buy, or when should we meet with the lender?
Whenever you feel, I think, called to meet with a lender. I mean, it's never too early to sit down and just see where you're at, even if it means you're not ready at this very moment. At least you're aware of where you're at and what you need to work towards to get to, the point of being ready. So, when people say, "Oh, I'm not ready yet, and I'm going to wait until, for X, Y, and Z." So, well, there's no obligation or commitment to at least sit down and go over your questions, get a plan in place. So just sitting down and having the initial conversation to know that, okay, it might be something that I need to really work towards for the next 6, 12, 18 months, or this might be something that actually could be attainable within the next 30 days. So just having the initial conversation, I said it's never too early to start.
And what kind of things would we be getting or doing at that point? Are we getting a pre-approval letter? Figuring out what we can afford?
So again, just sitting down and having a conversation, it's getting to know the person and knowing what their goals are, their aspirations, just, what is your goal at the end of the day? I don't think I could be a homeowner. Okay, well, let's ask some just very basic questions. Do you know what your credit score is? Are you currently working? How long have you been working? What's your annual income? How much money do you have saved? So just having that just back and forth conversation of understanding like asking those questions and just getting comfortable with it and knowing, okay, well, based on what you're telling me, I think the next step would be at least doing an application, exploring your options, and then at that point, if they're ready to take the next steps, we do that with, doing a a deep dive of a full, application with a pre-approval and seeing how much you could qualify. And then now how much you can qualify. Or if you're like, well, how do I get to X amount? So again, it's one conversation leads to the next conversation that leads to, the next steps in the process.
Yeah. Let me just remind people, we have more people. You can submit your questions through the question and answer section in the webinar. And we won't see your hand or the chat, but we would love to get your questions to make sure we answer them. So Tiffany, Kendra mentioned credit scores. Let's talk a little bit about that because I know it's something we hear a lot about. So why is that important for obtaining a home loan? And tell us a little bit some of the myths or concerns that people have about minimum scores, or if their score is low or don't know what their score is.
Mm-hmm. Yes, so credit scores are very important. They do affect your mortgage interest rate and possibly your mortgage insurance if you're putting less than 20% down, depending on the loan program. So it is important to keep your scores as high as possible. And lenders such as myself and Kendra, we can show you ways to increase your score. So different loan programs have different minimum credit scores. Typically speaking, lenders will go as low as 580 for a VA loan or an FHA loan with strong, what we call compensating factors. And conventional financing, the general rule of thumb is a minimum score of 620. It can vary from lender to lender, but that's generally speaking what the minimum requirements are. If you're on the lower end, as I mentioned, the compensating factors are going to play a big role in whether or not your loan is approved. So that would be things like a larger down payment or cash reserves after closing, or maybe even a cosigner. And then did you want me to touch on how to increase your score?
Sure. Yeah.
So the big one obviously is to pay your bills on time. But also a lot of people have the misconception that once we pay off a credit card, get off and close it. It's important to keep those credit cards open because the other big factor in your credit score is your credit usage. For example, if you say have 4 credit cards and combined you have available credit of $10,000, you want to keep your combined balances at 2,500 or 3,000 maximum to be able to have the highest score possible.
And should I close cards? You mentioned that, like closing cards, because history is also a factor, right?
Correct. Yeah. Do not close an account even if you've paid it down to 0. Just keep it open so it shows a lender that you can manage your debt wisely.
And why does debt matter, or how does that talk to us a bit about the debt to income ratio?
So the debt to income ratio is a percentage of your gross income, so your before tax income, that's being used towards your monthly obligations. So for example, let's just say for easy math, your gross income is $10,000 a month and your housing payment is $4,000 total. And then you have other obligations such as a car payment, credit cards, or student loan debt that total $1,000. So that's combined between housing and other debt, $5,000. Your debt to income ratio would be 50%. And that is basically the max that we can go for a conventional financing. For an FHA loan, we have a little bit more wiggle room. And we can go up to about 57% of your gross income.
Great. Good. And we'll touch more on some of those things later as well, I think. But so Kendra, a lot of people here might be first-time home buyers or may not know if they're first-time home buyers. Can you define that for us? Because it's not necessarily exactly what it sounds like. And what are some of the programs that a first-time home buyer might be able to take advantage of?
Well, yeah. So, I mean, to me, first is first. It's, it's the first time you purchase a home, you only have one first, but, there are, sometimes gray areas when you come to first time home buyers. So a true first time home buyer, and that's something, again, that gets sometimes misconception is, people reach out and they'll say, I can't do an FHA loan because I'm not a first time home buyer anymore. Well, that's not the case. FHA loans are a very common first-time home buyer program because they allow for 3.5% down. They are more forgiving with your credit scores. As Tiffany mentioned, sometimes we can go as low as 580 with FHA, but FHA is not just for first-time home buyers. You can be a repeat buyer for FHA. When you go to conventional, typically a first-time home buyer would be, depending on where the loan limits are, in the lower loan limit areas, a first-time home buyer can do as little as 3% down. And then, in the higher cost areas such as, Santa Barbara County and the coast, it's 5% down. So a first-time home buyer would be be able to bring in as little as 5% down instead of the 20% down. So, it just kind of depends. Not everyone, in my professional opinion, fits the same boxes. It's like asking those questions because, you might have owned a home, 7 or 8 years ago, and based on certain guidelines, you're now considered a first-time home buyer again. So you might be able to explore some first-time home buyer programs due to not having a home in the last 7+ years. Or if you are truly a first-time home buyer, we want to see that. So we don't see a mortgage, a mortgage on your credit report. And so there's just all different ways to look at it. So it's knowing, asking those questions and knowing if you're a true first-time home buyer, and the misconceptions that FHA isn't just for first-time home buyers, and then, waiting periods for different programs to be considered a first-time home buyer again.
Great. Yeah. In addition to FHA, are there some other programs that people should be aware of? I'm thinking of like VA or
Oh, yes. I mean, if the VA loans, in my honest opinion, are probably one of the best financing options, because they do help our veterans for, I always say thank you so much for your service. And it allows for 100% financing. If you are a disabled vet, then there is no funding fee. They are more forgiving again with credit like FHA. So, you can go down to 580 with a VA loan in most cases. It's it's a wonderful program for anyone that's served our country or is still actively serving, is to explore a VA loan. No, again, it's one of my favorites not to be biased, but it is a wonderful program to do.
that's great.
100% finance is amazing at the end of the day, and then no mortgage insurance. So anytime I talk to a veteran and, they say, oh, I want to look at an FHA loan. I said, well, why aren't you going to use your VA benefits? So then it's just asking more questions and understanding what their financial goals are. But if you can do a VA, I mean, let's do a VA loan.
Yeah, absolutely. Okay, so Tiffany, you kind of mentioned it, the different percentages, down payments for some of these other programs. Tell us, don't I need 20% down? That's what I heard, or that's kind of the word out there. So tell us about down payments a little bit.
Yeah, as Kendra mentioned, there's different loan programs that you can put very minimal down. So having the 20% down is a common misconception. So the FHA loan, 3.5%, VA, obviously 0% down. And then if you're a first-time buyer with conventional financing, as little as 3% down. But it's important to keep in mind, if you don't have the 20% down, then you will be paying mortgage insurance with the exception of the VA loan. And that just allows you to get into home buying sooner. So you think about how long it may take you to save up 20% down versus just paying a little bit per month to enable you to buy that first home. And there's different ways, different programs that have down payment assistance for first-time home buyers. You can also get gift funds from family members. I think there was a question, can you take out a personal loan for a down payment? And typically that's not allowed. But you can borrow against your 401k. And I always encourage my clients, if there's any way to do that, to borrow against 401k or to get a gift, is in their best interest, because the down payment assistance programs, although they are helpful and have their place, they can be very pricey with higher interest rates and everything. Another way that's very unique with CMG Home Loans is we have what's called our Home Fund It program. And it's kind of similar to a GoFundMe, but for your home buying. We will match $2 for every dollar that you collect from family, friends, and whatever, up to $2,000. So it's, potentially $2,000 you didn't have before that can go towards your down payment or closing costs. So.
No, that's great. That's a great program. And we just want to make sure that you are all aware of some of the other opportunities for you. Some of the member employers with Coastal Housing Partnership have employer down payment programs. So if you have questions about those, you can certainly talk to us about, ask us about those at Coastal Housing Partnership, or ask your employer. We also partner with the Housing Trust Fund of Santa Barbara County. So if you are living or looking to buy in Santa Barbara County, there are down payment programs where you can get up to $125,000 or $200,000 towards your down payment costs, depending on your income. So there are a lot of resources and things for down payments, whether that's family members or otherwise. So thank you for your questions. Let's see if we can answer some of these. If my down payment is less than 20%, then does that increase my monthly mortgage payment, Tiffany? Does lower than 20% change my monthly mortgage payment?
Yes, it does. Number one, because your loan balance will be higher, and number two, because we will need to add mortgage insurance. However, if you have a really good credit score, and you're obtaining conventional financing, mortgage insurance is very reasonable. For example, I had a client recently, 500,000. They were putting 5% down, and their credit score was right about 760. And her monthly insurance was only 114 a month. So it's very reasonable.
Yeah, and I would just say we're not suggesting that you don't put 20% down. We just know that it's very hard for people to get to 20% down, right? So there are alternatives. Kendra, we have a question here. Says, does rent and a car lease versus mortgage and a car loan count against debt to income ratio?
So anything that's reporting on your credit report will be added to your overall debt to income ratios. So, that is a lease or an auto loan. It doesn't matter. We have to hit for both, just like we hit for minimum of credit card payments. So anything that's reflecting on the credit report, and that's either your minimum of your credit cards, or your auto lease or your auto loan, is factored into qualifying. And then the second part of that question, John, I just want to make sure I'm answering it correctly.
Well, I think, if you're buying a home, obviously it's going to go from rent. You're
To
paying,
owner.
no longer paying rent, now you're paying mortgage. So that's
Yeah.
calculated. So your
Yeah.
rent won't count against you, but because it's going to be your mortgage payment. And then I know there are differences in the way that you can calculate, at least at the end of a car loan versus a car lease.
Yeah, so the difference is if you have a lease, we can't omit an auto lease, because normally when you turn in a lease, then you get a new lease, right? So that continues unless you buy out the car. If you have an installment loan, so if your auto loan is financed, and if you have less than 10 payments left on that auto loan, we can omit that auto loan on a conventional loan. So say you have 10 months or less on your auto loan, and there's that $500 payment. That payment will be omitted and won't be factored into your qualifying, because we know that it's going to be paid off in under a year. But that's only for installment loans, not for leases. We can't omit leases if there's only 10 payments left.
Great. I'm just sharing, answering a question about Housing Trust Fund. So it's Housing Trust Fund of Santa Barbara County that partners with Coastal Housing Partnership, but they have their own down payment programs. Okay, great. And so let's talk a little bit about finding a lender. what should we look for in a lender? What kind of questions should we ask them? We talked about meeting with them early, but we still need to select a lender. And so tell us a little bit about what you recommend or what the relationship is like that we should be considering. Should we just go online and find the cheapest lender?
That's my question, correct, John?
Yes, sorry.
Okay,
Yes.
just making sure. I didn't want to let Tiffany speak. So, ultimately, I always say that this, at the end of the day, technology is amazing and it's helped make things move faster and quicker and allow us to be more efficient. But at the end of the day, I do believe this is a relationship business. I mean, this is one of the biggest financial investments that you make is your home purchase. Your hard-earned money is going to ownership. It's not to renting anymore. So, and it can be a very, daunting, overwhelming, confusing process. So at the end of the day, in my experience over the last 10 plus years of doing this, is it's a relationship, sitting down with a client, getting to know them. So you have to have that, be comfortable with one another because you're sharing a lot of very personal information. You're going through a lot of, fears and anxiety, the unknown. So, it's just the initial call or sit down meeting is very important to feel like, okay, this person really understands where I'm coming from and my goals and aspirations, plus my, the emotions that I have into it. So I always say, you need to find a lender that, you feel comfortable that you're going to be able to trust and have that relationship because even after you get the keys to your first home or, throughout your phases in life, it's a relationship. And I've been very fortunate to have long-term relationships with my clients that will, you'll be calling me as an example. If I was your lender, you'll get like things in the mail and you're going to be asking, is this real or not? Or you're going to be like, I heard interest rates drop. And so, or by the way, I had a baby. So now it's time to, I need to, buy that next home. So this isn't just, it's not transactional in my experience. It's a relationship. So whoever you decide to work with, you want to make sure you're comfortable because that's that's literally helping bring you home at the end of the day, is what I say.
Yeah, and I appreciate Tiffany and Kendra being here, and I think it's really true with all of our network partners that they understand it's a two-way relationship, and they want you to interact with different lenders and find the right one that works for you and them. And so you shouldn't be feel concerned about talking to two or three people and finding the right person you connect with because it is a very intimate relationship. You're sharing your all of your financial details and talking to them about a lot of specifics when you're buying a home. Tiffany, I have a question from an attendee, and then I'll have another question for you. But just going back to something we talked about, a specific question: do you recommend closing some credit cards if you are nearing or at the recommended overall percentage of credit usage, around 30%?
No, I don't recommend closing any credit cards. Um, it's important to keep those lines of credit open so it shows that you have more credit available to you but not necessarily utilizing it. So keep your usage low, 25 to 30% ideally or lower. But keep those credit cards open. And if you need to, cut up the card itself, but keep the line open. Sometimes it's, a little trick or a hack is if you have some credit, some revolving credit, and you're able to obtain a personal loan, so that's more of considered an installment loan, put that on a personal loan instead, that's going to bump your credit score up. So it's going to take those balances from a revolving line of credit to a fixed payment. So if it makes sense for you payment wise and if it saves you an interest, that's a little hack to increase your credit score if you're not able to pay your loan or your balances down right away.
As long as you don't go put more on the credit cards.
Right, right.
Great. Okay, and so then, Tiffany, give us a broad overview. How do you feel like the lending market is right now? Obviously, there's a lot of things going on in the world, and it's hard to know, but where things are going. But give us a sense of what it looks like, and should we wait, or how do you time the market? What do you think?
Well, unfortunately, it's impossible to time the market. None of us have a crystal ball, right? And I understand the hesitation with everything that's going on in our world. But I feel like there's always something that's happening. And we all have to live somewhere. So, rates are lower now than they were about this time last year. And there is more inventory right now, so that's a benefit to buyers. But I always tell my clients it's a good time to buy when it feels comfortable to you. Sometimes you may qualify for a higher loan amount or payment amount, but we want you to feel comfortable with the payment, that it fits well within your budget, your lifestyle. I don't ever want my clients to feel house poor or stretched too far. Of course, buying your first home always feels like you're a little bit stretched financially, but there is that sweet spot. It's really just about the timing is when you feel comfortable and when you feel, that it's doable for you and it's manageable.
Right. And this is where you say marry the home and date the rate. Right? So find a home that you love and a time that feels right for you. And even if the rate isn't great, you can refinance, which you can also get your coastal housing partnership benefits when you refinance with our network partners as well as buying. But maybe just touch on that quickly, Tiffany, as to what that looks like.
The coastal housing
No,
benefits?
the refinancing.
Oh, excuse me. Yes. So, if, as John was saying, the marry the house, date the rate, with the rates where they are right now, everyone, of course, everyone hopes that the Iran war will come to an end soon, and that will cause inflation to drop again, which will cause rates to drop. So, if you can get into the house now and you can manage that payment, um, you know, hopefully in 6 months to a year you'll be able to refinance into a lower rate. So say you're locked in today at 6.5%. If rates drop typically 0.5% with low cost, it would be a benefit to you. You'd be saving on your monthly payment with not a large amount out of your pocket for those refinancing costs.
Great. So Kendra, we don't have as much of this as we did a few years ago, but from the lending side, what can we do to be more competitive when we're making offers if there's multiple offers?
So one of the things I always talk about and been talking about more and more on both, the buying side and working with realtor partners, because again, it's a team effort here, is strategy. Strategy, no pun intended, is key to help bringing you home at the end of the day. So how do we, after we get you pre-approved, it's not just having that pre-approval, it's how do we strategize your offer being accepted? And especially as a first-time home buyer who might not have the 20% down, how can we leverage you as a competitive buyer so you can purchase your first home? Because, being a first-time home buyer, you might be at technically the lower end of the price point in the market. And so there's more competition. So, you might be one of five buyers. And how can we leverage you and make you the strongest buyer in an offer situation with a low down payment? So the way I do that with my realtor partners and what I explain to my buyers, especially my first time home buyers, is that, if you really want this home and we know you don't have 20% down, how can we make you look like you are the strongest offer? So that's discussing, a game plan of, a very quick close. So that's why we get you fully underwritten, pre-approved in the upfront. So there's no surprises. We do all the legwork upfront to make sure we cover all of our bases. So when you do submit an offer and we say we're going to close in 18 days or less to make you competitive, we are confident that we can do that. So even if you have a low down payment, at the end of the day, for most sellers, time is money. So if we go in even with a low down payment and the seller is going to get what they want at the end of the day, and we can close very quickly because we're all on the same page, that gives you a lot of leverage as a first-time home buyer. Shortening contingencies, which, for your appraisal, because you're going to need to get the home appraised. Plus, again, we have the stepping stones that we walk through of when you're actually in escrow and in contract of your home. But to get your offer accepted, it's strategizing and working together to, at the end, they get your offer accepted and to bring you home. So it's a team effort here to, it's not like, okay, here's your pre-approval letter. You walk off and you're just working with a realtor and then, you're calling me when you got it accepted. It's like, no, we're working together to make sure we win at the end of the day. So how do we do that? So it's, a strategy.
Yeah, and it's important that you bring the whole team together, like you say, Kendra. I like to use that term too. There's also realtors as a part of the network partnership, and so you want to find a realtor, and they'll work closely with your lender and you all work together to make the best strategy to make that offer and get that home. Tiffany, I'm going to go back to you with another question. Thank you, folks, for giving us your questions, because it's really great when we can answer your specific needs and questions. So keep those coming. Going back to the refinancing, Tiffany, the question is, are refinancing rates influenced more by national rates or your personal financial picture, or both?
Are they influenced by
like national rates, just or maybe it says, are your refinancing rates influenced more by national rates or your personal financial picture, or both?
both? Yeah. So refinancing rates are going to follow the same market trends as purchase loans. And refinance loans in comparison to purchase loan rates are going to be just slightly higher. You see rates being advertised out in the general public. In most cases, lenders are quoting their very, very best purchase loan rate. And so a lot of times I'll see clients will say, oh, well, I want to refinance. So-and-so offered this rate. And I have to remind them, okay, this is based loan financing, the highest credit score possible, the lowest loan to value possible. And so refinancing rates vary quite a bit. So hopefully that answers.
Yeah, no, that's great. Thank you. So shifting gears, another question for you, Tiffany, though. Can you talk to us about different loans or considerations? And I don't know if CMG does this, but maybe you can talk to it. But we're talking about mobile homes. A lot of times that's affordable in this area. Talk to us about mobile home lending and the differences there.
Yes, so CMG does have the ability to offer mobile home financing. It is a completely different animal than your standard financing on a single family or a condo. So in most cases, you're going to need to come up with a larger down payment. And you also have to qualify with the park itself. So you have to be approved with them. Mobile home financing, the rates are going to be higher and with shorter loan term. And then you have to add in your space rent. So there are a lot of things to consider when looking at mobile home financing. Another major difference is that because it's not considered true residential property, there's lower amount in property taxes, and then the space rent itself is not tax deductible. So you'll need to, I always advise my clients to talk to their CPA if they're looking at purchasing a mobile home versus a condo, for example, to greatly impact the amount that you could possibly write off on your taxes.
Yeah, and I think it's a good idea if you're thinking about mobile homes to be upfront and to mention that with your lender, so you can understand those differences and make sure they lend on it, because not every lender does.
Correct.
Another question here that I'll help with, but then I'm going to pass it over, kind of give part of it to you, Kendra. The question is, do I need to work with a local lender to qualify for the Housing Trust Fund down payment assistance? And the short answer is yes, because the Housing Trust Fund down payment, because of the qualifications and the restrictions of it being a second deed, we qualify certain first lenders who understand our program and have seen our documents to lend with that as a second loan. But I think it's also fair to ask the broader question, Kendra, why would somebody want to work with a local lender compared to maybe an online lender? They might see different rates, or what are some of the values to having a local lender?
I mean, again, it's being able to come into an office and maybe have the ability to sit down with someone at a local office, especially if you're a first-time home buyer, and knowing who you're talking to at the end of the day that is helping you again with your home financing journey. So, a local lender, you can go into an office unlike an online lender. Your local lender knows your market. They understand, what you're going to be competing against, what the trends are, how can you work together. Some markets have, higher property tax rates. Certain communities have HOA dues. That's not something that an online lender from you don't know where would understand. So, having a local lender being able to go over those things as part of the upfront of the pre-approval process, like, oh yes, I'm looking to purchase in this area. Well, just so you know, if you haven't talked to a realtor, that area might have higher property taxes, so that impacts your monthly payment. Or we got to make sure we factor in HOA dues. I've had a lot of clients that, they start in the journey and then they're like, oh, I got, someone called them and solicited and said, oh, I went, an online lender was quoting me a lower rate. But then at the end of the day, they didn't understand the property taxes, even in the state of California, because they were in the Midwest. So, they're like, oh yeah, my payment was
Fire
this.
insurance.
And fire insurance, which is, if our beautiful state of California has so many different layers to it. And, so understanding, yes, just factoring in the proper fire insurance quote, it's not $90. It's most likely going to be $150 or more. Your property tax rate, so that you have a true, I've seen buyers send, oh yeah, this is what this online lender quoted me. And of course, the fees aren't correct because it's not, going over the customary fees for the area. The property taxes are wrong. And I said, well, of course that's going to look more appealing to you because they're not quoting you they're not giving you a real quote and they don't know the market. So, and I'm sorry, most online lenders aren't working at 8 or 9 o'clock at night when you're on a weekend and you're trying to submit that offer against 5 other buyers and you found your dream home that you're going to bring your new baby home to, and you're like, no, this isn't my home, I know it, or I really want this as a great opportunity to me, so how do we work together? And an online lender isn't going to be answering your questions when you're in that moment of almost like excitement and panic at the same time, or giving you a pre-approval letter based on that offer on the weekend. So a local lender to come in and sit down with, plus just knowing the markets and how at the end of the day we're disclosing everything up front, so that way when you get to the closing table, there's no surprises. So that to me is what separates when you're working with a local lender compared to an online lender.
Great.
Can I add to that real quick?
Yeah, please.
Okay, so in addition to what Kendra said, working with a lender such as myself or Kendra, being that we're local, especially in the markets of Santa Barbara County and Ventura County, I feel the realtors have a very tight-knit network. And again, going against or using Kendra's example, if you are going up against 5 other offers, if they see a name on a pre-approval letter that they know, and they know that that person, that lender can close the deal, they may take your buyer's offer versus another buyer's offer that's working with an online lender, just because they know that they can trust that that deal is going to close and close on time.
I'll second what Tiffany said. Yes, exactly.
Love
It has
that.
made a difference at the end of the day.
I want to thank everybody again for these questions. I've got some more more questions coming. Tiffany, what information should a buyer prepare ahead of time before meeting with a potential lender?
That's a great question. So we'll look at your employment history, your residence history for the past 2 years, and then, obviously your credit information, but mainly your income and assets. Those are the two big ones that we'll be looking at. So if you can gather together 30 days of pay stubs, 2 years W-2s, and/or tax returns if you're self-employed, and 2 months of each of your asset statements. That's kind of a good starting point anyway.
Great. What else, Tiffany, or would you say we haven't covered, or that are some myths that you want to dispel while we have these folks here?
I think the main thing is that you don't have to be ready right now. If you feel that you're ready to jump into home buying right now, I like to say you just have to be curious and, curious about the process, curious about if what it would take for you to get to that point, and to start the process early, and just talk to a lender that you can have a conversation with, like Kendra was saying, someone that will ask the questions so they know about your goals and also just your unique financial situation because everyone's situation is different. And so a good lender is going to look at the whole picture and not just put a square peg into a round hole, so to speak. We're really going to try to recommend the best option for your specific situation.
Yeah. And same question to you, Kendra. What other myths would you dispel, or information would you want to share that we haven't covered?
It's not as scary as you think. Everyone, they're like, I think one of the things that I get most of the time is that, making that first even phone call or just asking, do you think I'm ready? And then everyone's like, well, I'm not ready for you to pull credit. My credit score is going to drop if you pull my credit. And I'm like, okay, well, no, it's not going to drop your scores. First of all, we always start with a soft credit pull. So, if you're going to want to at least kind of start pulling the curtain back a little bit to see, the next, that next phase of after the first initial conversation and starting the pre-approval process, you're going to just do a soft credit pull. It's not going to be painful. I promise you. I mean, I feel like every time when people are like, oh, I don't want you to pull my credit. It's like going to the dentist. I don't want, it's going to drop my score. And I'm like, it's a soft pull and at least gives you a range of where you're at. It's not a hard inquiry, but at least you know where you're at. And you're like, okay, maybe these are the things I need to work on to get my credit up. So, it's not as scary as you think. And your credit score, I worked so hard take my credit up and I don't want you to pull my credit because it's going to drop. So there's a big misconception that, a credit inquiry, even when you do decide to do a tri-merge credit report, which is required for a full pre-approval, is that my score is going to drop 40, 60, 100 points, and their apps are saying they're at 750. And then when we do pull it, it's lower. And I said, well, a tri-merge credit is different than what your credit reporting apps are, but you still have excellent credit. So there's, I always think that in the first part of the process is the fear of the credit pull. I almost feel like it's like that scary. It's like, okay, it's not that scary. You still have good credit. That is the first stepping stone. And again, the credit is good. I typically say 90 days because you say it's a one-time pull and we know where you're at for at least 90 days before we have to re-pull it again if you haven't found that home of yours. But at least we know where you're at and if you're ready now or what you need to work on. So it's, it's not as scary as you think. We're here to guide you. If it's not now, it's getting a game plan when it's making it exciting again. I feel like, our biggest purchase at the end of the day is our home. It's where we come home. We want to come home at the end of the day. It's our safety, our, happy place. So how, to get there, we take it takes home financing. And how can we make it? I put how do we put the fun in funding your home loan? Because it is a really fun, exciting, scary process, but it's really not that scary at the end of the day. If you work with someone that you trust and you feel comfortable with, and it's a relationship. So it can actually be a really exciting, amazing process, if you, take the proper steps on the upfront and work with someone that is in alignment with your vision and your goals of homeownership. So
great. Well, thank you. This has been a really great interactive webinar with lots of questions. So thank you for attending and sharing your questions. Nice comment from Heather. This is extremely helpful inside scoop. Thank you. And so you're welcome, and we thank you for attending. Unless you have last comments, Tiffany or Kendra, or other questions, we have a couple minutes. We're happy to answer more questions, but this has been great. We really appreciate your time and expertise that you both have shared with us here.
You're welcome.
Yeah, you're welcome. Super fun.
Thanks everybody for attending.
Thank you.
And we hope you have a great rest of your day. And feel free to reach out to any of us. Emails are here on the site. You can certainly reach out to Kendra or Tiffany with questions or to help you on your home buying process. So have a great day, everyone.
Bye.
Bye.